When the graphs turn red in the morning light, crypto dreams sinking out of sight. We hold on tight through the stormy night, knowing the sun's gonna shine so bright. Emotions run high but we keep control, riding the dip as we play our role. The market's wild but we stay whole, through valleys low to the highest pole. Hold on strong, we're riding the waves, through the highs and crashing caves. Though we stumble, we're not slaves. Our spirit free, our courage brave. Numbers fall, don't lose your spark. Find the light even in the dark. Every loss is just a part of the journey that shapes the heart. We bounce back up, we never fall. Every stumble makes us tall. Hold on to hope and heed the call. A brighter day waits for us all. Hold on strong, we're riding the waves, through the highs and crashing caves. Though we stumble, we're not slaves. Our spirit free, our courage braves.
Riding waves of midnight belief, promises turning into grief. Digital whisper says hold tight, but I'm losing faith in the night. When moon crypto, when moon, I'm so tired of waiting. Everyone is capitulating. I keep hanging on to my dream, but nothing is as it seems. When moon, streams of gold, screens flash by, staring blank into the sky. Echoes of fortune.
Check 1 2 1 2.
The shadows keep blocking my view. When moon crypto, when moon, I'm so tired of waiting. Everyone is capitulating. I keep hanging on to my dream, but nothing is as it seems. Pacing halls of shattered belief, wandering through forts of disbelief. Dreams dangle like falling stars. I'm still trapped behind these bars. When moon crypto, when moon, I'm so tired of waiting. Everyone is capitulating. I keep hanging on to my dream, but nothing is as it seems.
red graphs, numbers falling. Crypto dreams fading, no more all in. Grip tight on the wheel, stormy squalling. Sun blaze soon, clouds start stalling. Emotions flare, but we stay focused. Dipping down, yet composed and fearless. The market's crazy.
It's 8:03. I'm going to go ahead and switch over to the screen.
From the bottom up, never hopeless.
For those of you out there that have been hitting that like button, I just want to say thank you very much.
All right, welcome everyone to, this is class number 6 in our chart school series here, our live mentorship, or trading classes, I guess you would say, TA class. And welcome everybody who's here now or not now, and maybe here a little bit later. And this section, this time, I think it's going to be interesting. We're going to do a little recap session, just a small little thing, and open up for any Q&As or any questions you might have over anything that went over so far. We went over horizontal support resistance, diagonal support resistance, or also known as trend lines. That led into patterns, and then we started getting into that idea. We also got into a few indicators. We talked about a little bit about divergence, but mostly talking about the RSI. And then we brought in the moving averages the last session and laid out my 5 moving average strategy and how that works. Now I want to give a shout out to someone else. I was in Joe's live stream earlier today, and there's a man in there, I think he's a man, named David Brumbelow. And he was talking about, he used much different moving averages than what I use, but it was the same basic concept. And it was just kind of cool that's the first person I've ran into in a long time that actually understands. He actually sees the same things that I see in the moving averages. We read them the same way from what I can gather, the dance of the price and the moving averages and how they work. They use this in different ones, but the concept is the same, and how price reacts and how these moving averages reacts to all of them. And that's what we were talking about last week. And I don't know, it's just really cool when you run into somebody that uses the same or similar type strategy, because these are things that, I mean, nobody taught me this. I had to figure this out on my own, and it's just real cool when you see somebody else also sees the same thing. I had to piece together all the little information I was getting from here in Investopedia, and like, well, the 50 crosses the 200. Well, what about, and then discovering all this stuff over a long period of time. And so, you know, it's a privilege to me to be able to share these ideas here on YouTube and kind of consolidate them, because it took me a long time to figure this stuff out. And so we can go ahead and cut a lot of corners with you guys over here and showing how this works out and dedicating videos to that. So the last video we did was to that strategy, but it was just really cool to see that there's somebody else that's been in this game for a while too that also uses a very, very similar strategy. I mean, they had moving averages, I think, went up 1,000, 100, 1,500. The way it sounded to me, it was really more like the market cipher A band that we showed last time. But the same thing works. Moving averages, they were just convinced as I am about them. They're so predictive if you listen to them, to what they say. So I'm going to open the floor for any questions about moving averages, especially that. But then what I really want to get into is I'm going to pull up some trading rules. We'll start getting, we went over patterns a little bit, and we talked about triggers. I want to do this, and I want to start venturing into trading ideas and entering trades and trade setups and that kind of thing. But then I'm also wanting to start moving into Fibonacci on the next courses too, starting getting into that, because I think that that's a real eye-opener right there. My eyes are still being opened every day to some things on that. But the moving averages, and we talked about a 5 moving average strategy. You can use whatever you want. You can just use 1 moving average if you want to, but you get more information the more that you have on there. And I'm looking here on the 6 minute, and we talked about the flippening of when the moving averages flip and they go in the right order. And here on the 6 minute, here on Bitcoin, here's a beautiful example of the moving averages that I use. They just flipped. They just flip. You see the curve. And then we finally got this 360 crossing over these bigger moving averages, and finally we got that 600 crossing over that 800. Now for the band that I've got, it has completely flipped. Now, by some others, if you're using bigger movement averages, like David Brumlow on his, it would still be in the process of a flippening. But here we go, and that's bullish, and that's a good way to look at these movement averages. It's not about them getting tight, bunching up together. It's about what they do in relation to each other and in relation to the price of those moving averages, in my personal opinion. And they can act as support. They can, but they're not static support. It's a different kind of support. But it's whenever price comes back to meet an average price of what it was for so many other candles, like the red line 200 moving average, that means last 200 candles, that's its average price. Well, if price happens to come back from there needs to be a reaction. And the general rule on any time frame is the 200 moving average. That's the general. That's our zero line. That tells you if you're bullish or bearish, if you go above or below that one. And you can also paint that with these bigger moving averages. And we talked about, and also I think David was kind of hinting today when in the chat there. But yeah, this gives you insight to the bigger time frames. I don't have to flip onto so many time frames to see what they're telling me. I'll get the indications on whatever time frame, like on the 6 minute, I can see several time frames ahead as to what's going on. I don't have to flip it. But that's probably something we'll get into too. We've touched on it, but time frames, using time frames in your strategy. The thing that I've stressed is that, I want to go over that right now because that's a good little recap thing, is that when you are planning out something, you need to, and as we start getting into some of the WD Gann's ideas, it won't be tonight, but later on, because I will keep bringing up WD Gann's ideas as I come across them, and as I see their relevance. But starting out on the weekly gives you some very important data. And so I always recommend you look at your weeklies, look at your monthlies even. That gives you the bigger picture. That's the stronger move of what's going on. Whatever you see on the bigger time frames there, the weekly. Might even go, I even have a 3-day just to kind of go in between that and the daily. But the weekly and the daily are two of the biggest time frames to watch, and where to plan what you're going to be doing. Because I guarantee you get into a trade on a small time frame and you're there for how long? Maybe something supposed to be a scalp that you're hoping for just a few minutes turns into several hours. Might even turn something a day, either on the plus side or the negative side, into the days. And you might even find yourself in that same trade over a week. But that's where these bigger time frames can help give you an idea. You see what's going on ahead of time, bullish or bearish. The idea is there, and work our way down daily. Somewhere around 4 hours, a good one. And choose 6, 8, whatever floats your fancy. One thing that you can do, especially with things like moving averages, it works well with moving averages on time frames, is you can kind of stair step down and you see where price starts interacting to some of these moving averages that you use, especially the 200 moving average. Anytime you're walking down and you see price is at a 200 moving average, well, maybe you want to stop there and hang around that time frame for a little bit. That one might be giving you some information, like right here on the 12 hour. We just broke the 200 moving average. 100 moving average up here, going to be some resistance. If we make it up there, my 50 moving average is already where we're seeing some resistance. So this 8 hour or the 12 hour chart is a good one to watch, in my opinion. Let's see, what's the 8? What's up? You froze up on me. Oh, the 8 hours, great one to watch because the 200 moving average is acting as resistance. That one even more important than the 12 hour. Actually, this is kind of good, but it's kind of Michimoku Cloud saying this could get kind of hairy. We could get rejected and come back down in range here for a little bit. It's kind of what I'm seeing here. So you can get you go to the different time frames and you listen to your indicators on there and see what they're telling you. So I guess we are talking a little bit about time frames for strategies. Now here on the 4 hour, we're facing resistance. It's at the 50 on this one, and the what looks to be the 360 if you're using my bigger moving averages. Though they're kind of teaming up here, might get some resistance here, but 8 hour looks like a good time frame to watch, and I would also recommend just a smaller time frame than that just to see how she's working out. Things are looking really strong for Bitcoin right now. We are at resistance on it, both with moving averages and this range profile tool, which we'll get it. We can even talk about that as it comes over. Guys, we got 2 people hanging out. Let me say hello to everybody and see if you got any things. And if not, we'll start getting into this. I consider that my recap right there, the moving averages. If you got any questions about anything we covered so far, or general questions, you can use this time. And from here, I'm going to segue, if there are no questions, into rules of trading by one of the masters. Some of these rules I don't follow myself. Some of them I'm not sold on. Some of them are just, damn, they're really good advice. They're going to save my ass. And I think we can all kind of that, but I figured it'd be a good time. And we can see what he says and compare it to how we've been acting or looking in the market. We got Glasshopper. How's it going, Glasshopper? We got Kelly L. Glad to have you here, Kelly. We got Ave. We got a full house. We're good to go. And of course, it's always open for anybody who joins later on and may be watching this at a later time. Hey, this is the old me. I hope I didn't do anything crazy last time you're watching me in the future me, because, man, sometimes I do. Anyway, glad to have you guys here. All right, so I'm going to go ahead and we're going to move over here. Oh, this is also something that I posted this over into the chart room. If you're watching this, you're not familiar with the Telegram group, which is totally free. I don't charge for any of this. It's just it's a private group, so you have to get the links from the description below and stuff. And I would post it, but I don't think it's working. Is it working? You should already be in here. Seriously, if you don't know about this, then you're a little behind the game. But that's okay. We'll get you caught up. Does this work? Oh, it's not working. But it is in the description below. All right, so over here in the student chart areas, I posted this book, Technical Analysis and Chart Interpretations. Now, I have not actually read this book, but I have scanned through it before I would post it over there. It does go over a lot of the things that we cover. It looks to be a good source for good foundational knowledge. I was going over what it has on the Fibonacci's. So far, so good. And what I can see, how we're explaining support and resistance. I likes it. This might be helpful to some of you guys. It might resonate with you, but from what I see, it looks very solid on the fundamentals and what it's teaching. It goes over the trend lines and channels. I'm loving it. It's going right in order, everything, volume, oscillators and things. So far, what I've seen from this book, I really liked, and what I saw from the Fibonacci's, I liked. Which we will probably start getting into next session. But that is it's over there. This is McGraw-Hill. This is like a college textbook, okay? Or it's Wiley. I'm sorry, Wiley. It's a good publisher there. Wiley Trading Series. Okay, a good book over there. There are some McGraw-Hill books over there from Carolyn Roden. I posted those up last week. That one is like a college textbook. McGraw-Hill. We just lost her. Crypto. Okay, here we are. So that book is available over there free. I guess technically you're supposed to be a lending library and you're supposed to bring it back. So make sure you bring back the PDF file. However, that's done. Whatever. We're not giving any. We're not selling anything. We're not profiting. We're just sharing information that is out there and that was shared with me. I pulled it right off the internet and I'm just sharing it with you guys. All right, and I also posted the 23 rules that we're going over. There is a copy of that over there. Did I post this? I got this. No, we've not talked about this. We're not went over here, but some of this stuff is still some stuff that I'm still figuring out right now. But I find I'm coming full circle. This I found in my old trading group PDF file, which is in the Telegram somewhere. You got to dig around. It's in the files section somewhere, but it does. But going back, I just happened to look at it on my Kindle today, Kindle app or something on one of my tablets, and I was like, yeah, this stuff did not make any sense to me back 4 years ago, but now this is like, yeah, I've been searching for this information here forever. I've been searching it, and now I'll come full circle and find, oh, dang it, man, it was in your PD. You guys, they never talked about it or explained it. It just happened to be in a bundle of information. But I'm like, yeah, this stuff makes sense to me now. This stuff makes so much good sense to me now, and I can't wait to start getting explaining to it. But yeah. Anyway, let's get over to the 23 rules of W.D. Gann. Because this is where the wisdom of the old people, the people before us. W.D. Gann, for those of you who don't know, let me tell you, William Delbert Gann, phenomenal trader. He definitely earned a reputation. Earned $50 million during the Great Depression. In 1933, he performed 479 trades, 422 of which were winners. That's extremely high win rate right there. Documented. which enabled him to receive an overall gain of 4,000%. He is credited with the design of a stock market forecasting system that's based more on dates than on prices. This is based on lots of things. He can get kind of deep and out there, but he's also got very solid, just your very solid trading rules to go by and things. He also is a big believer in trend lines and in angles of those lines. That's why I stress angles a lot. He's even got more in-depth ways to look at them, which we will get into that stuff too. Just an amazing man, an amazing trader. He's a Freemason, Mason. He's a 33rd degree Mason, which is hard to get by. My dad was a Shriner. He was a 32nd, and I don't know anything about Freemasons. They're like hush, but they geometry and sacred geometry. I know that was a big thing that they respected, and so does he. There's a lot of secrets in that esoteric math. Ironically, they used to use in building stone temples back in the day. That's how all that information was passed down. But anyway, regardless of that, I mean, he was a mathematician, and he was a very godly man, actually, I come to find. I've got one of his books about vibration and frequency, and he has lots of Bible verses in there. He is a good man. But now let's go with this here's a summary of some of his rules. Now, the author of this article, who put this together for forexcentral.net, also added in italics, some of his rules, and he's got some very good points there too. Some of his interpretations, maybe addendums that he would add to Gann's rules. Now, these are some things, these are some ideas that will save your ass if you, and some very wise things. These are some of the guidelines that we should adopt, and if they don't resonate with us, we should at least try to entertain the thought of them. And there's some that don't resonate with me, and I'll be honest with which ones they are, but I'm not against them, and I can see some wisdom in them, even though I may not apply them, and that might be my prevail, it might be your prevail. These are words of wisdom here from a master, and I think it will help us out a little bit. I know when I read over some of these things, I'm like, oh gosh darn it, why? I knew that, and I just don't ever do that. Why? I mean, this is a good thing, I believe. Let the old turkey get here. Get quenched there. Let me see if I can blow this up. Can we blow this up a little bit? That looks... Oh, that's too big. That's too much. Too much. Go hard or go home is what I say. Go hard or go home. I can't move it over, so maybe this will work. We can read it above my head. All right, so the number one rule right here is, according to W.D. Gann, and you might hear something variations of this, never risk more than 10% of your trading capital in a single trade. And so now if you're interpreting that as like your stop loss, that's what you would be doing, especially if you're trading futures or using any kind of margin. What he means there is that when you set your stop loss, you should have it all calculated out that your stop loss is never more than 10% of your whole trading account. Now that opens you up to where you can have some pretty good sized positions on leverage that. But the main thing is to have a set amount that you're not going to risk any more over. Now he says 10%. Now that's some people say that is kind of high. The general traditional rule is about 2 to 3% on average. Some sticklers say 1%. You're like, well, how the hell are you ever going to make any money? That's too picky. Some people think that. But okay. And so the author here says this is still pretty risky, and I agree by most standards that probably would be. Doesn't mean that I hadn't tried it though. I'm sorry. Being honest, we do watch the wild things when we're first trying things out, experimenting and everything, right? Well, it can get risky, and then that's where we get our tales of how we had our asses handed to us because we're bending or making up our own rules, aren't we? It's just kind of cool to see what other people how the successful traders. Remember, he made $50 million in the Great Depression. He was born in 1878. He died in 1955, and he died a multimillionaire. But he could actually figured out how to put price with time. He was big on squaring price with time. It's amazing, but he could actually forecast the day and what price would hit that day well in advance. up to forecasting. He'd forecast this stuff up to years in advance, and he was that accurate. Amazing. So he knew a lot more than what the general trader did. So he's one of my trading idols right here. One of my trading. I'm amazed. Everything that I learned about him, I just find him to be more and more of an amazing person and trader in his insight. Because he figured out something that nobody else is still. They haven't. He took it the real secret to the grave with him. I think it may be still out there and very secretly held on to, but nobody else has figured out what he has. Some have really come close, and Jenkins, and I've got some links to some of his videos if you're interested in WD Gann over here. This is not a Gann lecture, but for those of you, I do have a Gann section over here in the trading, in the Telegram group, in the chart room section. And where'd it go? Why am I not seeing it? It's over here. It is. WD is the second one now. These things change, but there are. If you scroll up, or just go to the file sections, there's some software over here. There's some software right here, and I've got that. It's open source software. I'll give you the link so you can go check it out. It's Gannzilla.com. But I like that one, and that's just like what you will see on some of the people who do Gann, the square of 9 and all that stuff, and with the planetary stuff and all that. That's where you start getting into really where he shined. That's where the date and price and square and all, that's where they get really highly freaking accurate. My experiments with all that stuff. But this guy over here, Michael S. Jenkins, a really good source for Gann material, and I got a lot of his links for his YouTube videos that are old, but and this is where I come across the circle, using the circle to square price and time, and that technique that he explains. I think is really interesting. I just can't do it on TradingView. It's not really set up to do it that way. But I've played around with it and have had some interesting results from it. But Gann, it's a rabbit hole that I recommend that as you start, becoming more in tune with the market and TA, and the more you get your own style down and you're adding tools to your toolbox and everything. I say, hey, try to go down that rabbit hole every once in a while, and a lot of it won't make sense, but it gradually will. It will over time. It will start clicking together. And that's how I learned all this stuff. It gradually starts clicking together. But there will be, if it still doesn't make sense to you, let me tell you that, keep it up. You may be 3, maybe even 6 months into it, maybe a year into it, and you're getting it, but there's still something that just didn't, I promise you, there will be that missing key will come together, and you will have your aha moment, and the light bulb will come on. You're like, oh, I understand price action now. I understand what's going on. It's making sense now. It will and man, that is such a cool day. It will just happen. It just, there's these little dots you didn't connect, and then that one day it will connect, and then whoa, and then all of a sudden you'll start connecting other dots, and then that's when it really, really starts changing. That's when it really starts. Oh man, you get passionate about it, I think. Anyway. So the rule number 1, never risk more than 10% of your trading capital in a single trade. And when we say that, some people interpret that, well, you mean I should be thinking about the trading position size, $1,000 account. I mean, not only make $100 trades, no. It means you only risk $100 or whatever amount you set for yourself. Like we said, 10%, that's kind of high for some, especially traditional traders. They're like, But for degen traders in the crypto space, that's like, they're risking them, the whole account. 10% max. Always use stop loss orders. Now, I think that depends on what kind of thing that you're doing. If you're spot trading, unless you're really, really just trying to do the trade thing, and not trying to do a midterm hold or a swing trade. Well, even in swing trade, yeah. So the more trade, especially futures, things like that, where you got margin leverage, yes, you got to do stop losses to save your ass. On some of your bigger, like your investing, you wouldn't use a stop loss. For your long-term holds for margin trading, you probably wouldn't use a stop loss. You can, but usually you're trying to collect a big bag, right? You're not trying to get stopped out. You're hoping it goes down so you can buy at prices. You're trying to let prices come to. Sometimes your prices don't get hit. You're like, oh man, I'm still down here. Just come on down, fill my order. you're sitting there waiting for a long time to build these bags slowly so you can sell them. So there's different trading strategies, but as a general rule, especially if you got leverage or perpetual futures, anything like that, stop losses. Yeah. Rule number 3 is never overtrade. Wow. Now I am guilty of that one because I think I overtrade a lot, because it seems like, the wisest traders out there, the ones who have proven and made their money, they say don't overtrade. And they say wait and let the trades come to you. And so you're either doing that, or maybe you're like me and it's a bad habit. I'll admit it. I'm not through it yet, but I'm in some trade. Now, as usually, I'm not having to go in all the time, but I've got an open trade all the time. If there's any definition of what overtrading is, I think that definitely qualifies into one of them. And I got to admit, it's probably a disadvantage. The smarter traders, when I'm reading and studying, they're waiting patiently for the setup, and then going in, and not always trying to force a setup or force a trade today. But that's kind of in crypto and YouTube. That's what we see every day. That's what's presented, because I think that's what gets the clicks. I mean, trading the 1 minute, trying to force a trade to go in. But even though you can see, I mean, really, when you step out and you see the guys who do that, you can't say it's working in their favor. You can't say it's working in your favor. Let me share another Gann rule that's not on here. And it's over in the banded, I think it's in the bandy wall. Is it right here? Yeah. The best way to trade. Now, you will see some people, and they're going with the 1 minute, and they're talking about scalping and talking about. One of them was saying, man, it's it sounded really good. It's this guy, and I'm not trying to be bad, but I'm just pointing out the truth, because I followed this. I'm following this, and the numbers don't lie. The numbers never lie. Although the speakers, they can also say things that don't really reflect what the numbers are saying, but. The thing they was saying is that, it's all the small wins, just the small wins add up. Well, in truth and reality, you get a bunch of small wins, but it's those losses that turn out to be bigger than your wins that kind of knock you down. That's how this account goes down from 5,500 down to 4,300 on this particular week's account. This is the week's account. Because all you hear is about the massive gains, and how you can do this, and even you can tell when somebody had a good day because they get a little bit more braggadocious. And so I heard something on one recent stream, well, like $150,000 in just a couple of days. I hate to say that, but it's true. Yeah, that's a sign of ego being up right there. That's one of the things. And you got to notice that yourself as a trader, because if you don't, you'll get caught up in your ego and you'll make stupid choices. And that's just the harsh truth. It's the harsh truth. You're trading against yourself. You're not really trading against other people. I mean, I know we hear that, and the market makers and all of that. Those are not your worst enemy. The person that can make or break your account, the only person that can make or break your account is you, and what goes up here in your head. And it sounds kind of weird, but in my weird connect the dot way, but in my show at night with the voices, Sean and whatever voice comes out, and the self-talk or the negative talk, you suck, or that's me poking fun at the psychology of what we have to go through, the voices that are in our head that tells us all these things. The psychology is that's the big thing. Trading is psychology. I did not expect that. That was one revelation I did not expect when I thought I want to learn TA and nail this market. I didn't know I'd have to do a lot of introspection on how I process information. But I'm telling you, man, that has been self-growth, not just in trading, but just in life in general. Like when my wife and my kid are arguing with each other or something like that, I'm the intermediary. I'm the one that's called in because I have a level head, and I can calm the storms, and I can, but it wasn't always like that. No, I felt before I discovered gratitude, it was very kind of toxic in my thing. Not wanting to be. It's just like my job just kind of did that, and just kind of drove me that way. and just being negative and down and always thinking, you see the worst of people a lot, and then you start expecting the worst. But mindset, psychologies, it affects not just your trading, but your whole life in general too. So I don't, the mentality, the mindset, and that's very important too. Your mental health and all this, because man, you can see some influencers that crypto looked like it drove him crazy. Some of the things that have gone on, and I would say it'd be easy when you think about the lifestyle changes that you can find yourself in. And that itself, man, you need a good solid spiritual basis, in my personal opinion, and a good solid psychological basis, because this stuff will try you, and you are messing with your money, and if you go out too much, you feel it hard, right? Anyway, this is okay. So the reason we got over here is because this guy's, because he scalps, he's scalping, and it makes it sound like he's made his money from scalping, but man, I've never seen his accounts actually maintain an upward balance. They've always been on the decline, always have. And I can explain. I think this next quote from WD Gann explains why. The best way to trade the most money is made by swing trading, or in long pull trades. Your long-term, your midterm trades, things that you hold in for a while, for more than just a day or even a week. That is following a definite, and the most money is made by swing trading or long pull trades that are following a definite trend, as long as the trend is up or down. Written in the middle there was avoid sideways trading. That's, if you read between the lines, avoid sideways trading. Okay, so let's put that out there. But following something that's in a good trend. But you must learn by rules to wait until the market gets out of a rut, sideways trading, or trading range, sideways trading. Wait for definite indications that it is going higher or lower before you take a position for a long pull trade. And always figure that you could be wrong, because the market could reverse. Therefore, follow up your profits with a stop loss order, or get out when you get a definite indication that the market has reached a turning point and that the trend is changing. So the idea is to get out when the trend is changing. And sometimes some of the things that you're taught is like, get out in the first red candle, or whenever you one night say the price is too far away from the 21. That's very subjective. But the rule of the game is to trade the plan the trade, and trade the plan. And I see a lot of people being taught there's no signal when to jump in a trade. It's just like, well, here's a pattern, and I'm in the trade. I mean, why did you go in though? Did you have a signal? I mean, one signal I use is price crossing over a 9-moving average and maybe that trend line. I mean, you got to have something that tells you go for it. And sometimes you just turn on, and just because there's something there, you're forcing a pattern or something inside. I'm just going to go in. And I'm not saying that I don't do that either. I've caught myself doing that. I do that from time to times, without going in without waiting for a signal, but that doesn't mean it's the right thing to do. And of course, your account kind of reflects when you do things that aren't the right thing to do. And so there's this number up here. I'm not saying there's anything wrong with scalping. I'm just saying it's just being hyped up as being the way for newbies to go on. And I think that's I think what if a newbie comes over on this particular channel that I'm referring to here, that's the worst place for a newbie to start, because they'll get the wrong ideas, and they will hear what they want to hear. They're not going to hear the truth. You know how this is when you come in. It takes you a long time to stop hearing what you want to hear, to finally start hearing what somebody's actually saying about trading. Because for the while, when you're a beginner, you're here, oh yeah, it's always going to go up, right? Yeah, it's going to go up, right? You said it was going to go up. You said it was going to go up. The people hear what they want to hear, and sometimes that's not what's being said, or sometimes it might be what's being said. I don't know, but for a new person to come in the market and start trying to leverage trade and copy trade or trade along with somebody, even though they say don't expect anybody to do that. So who's in here with me? Yeah, it's implied, right? Oh, if you'd been here, you should have. It's implied. You need to be trading with me. No, I would never. Never. That's just a no-no in my book. Anyway, okay. So never overtrade. Now the in parentheses it says this is from the other guys. If you have 2 trades open, the total risk involved should not violate the first rule. So okay, so if you do have more than one position in open, which I usually do, he's saying if you are going to try to overtrade, still try to follow rule number 1. Never risk more than that percentage that you decide in your account. Again, as a general rule, it's usually somewhere around 3%, traditionally 2 to 3%. Some people degen and go 5. WD Gann thought it was okay for 10. It's whatever you feel comfortable with. It's your rule. Here's one that I have problems with. Never let a profit turn into a loss. Because if you're building a position, especially if you do like margin trading like I do, position trading like that, you're going to see drawdown. Now that's not exactly a loss, but it could. But I've tried some of those techniques on perpetual futures, and man, that does not work out good. And so you got different strategies for different tools that you're using. Let's keep that. You're going to do things a little bit more strict. You need to do things a little bit more strict if you're using leverage or like the perpetual futures and things like that. Spot margin is not that bad, but you still gotta mind that risk with that. You know what your ranges are and when you gotta de-risk and lines in the sand, when you got to change tactics and things. But as a general rule, especially if you're strictly trading, and this would be like your futures and things like that, your perps, never let a profit run into a loss. So as soon as you're making profit, raise your stop loss so that you don't lose any money. And I do that more now. I don't catch it all the time because sometimes you're having to wait till you get in a profit, right? You're in a little drawdown first, maybe within this little range that you got, but you got a stop loss. But as soon as my thing starts going, and I know that my next lower high should be clear. I'm putting my stop loss in profit. Up until then, I try to put it right at break even or as close as I can get to break even. And that's a huge thing. That does keep you from getting into that big drawdown and having to ride something, because nothing sucks in getting in a trade and then you have to ride it down, and maybe you have to add more margin to it. Maybe you have to add more to that trade, and you can do that. So I'm just layering in. Well, maybe you are. Did you start out? Was that your intention? No. Well, you're not layering in, then you're just, you're kind of just adding to a losing position. There's a difference between, if you plan it out ahead of time, you got to plan. If you're doing it as a response because of a situation that you find yourself in, you're holding on to a losing trade. And that's a hard pill to swallow. That's a hard thing to, it's easy for us to we're coming to psychology. And this is where you learn if you're being truthful with yourself or not. And looking at what you're into. And that kind of leads me back to sometimes the influencer game. When you're here on YouTube and you got some big audience of maybe thousands or hundreds of thousands of people, you would have that little voice in your head says, I don't want to look bad. I don't want to show weakness. I need to be the man, and so because I'm the teacher, I know this stuff. You get or something like that. The psychology, what your little head tells you, affects how you act and behave, and you need some good rules to guide you. But raising your stop loss as soon as you can to break even, that has really helped me to avoid some getting in some good situations. But like I said, sometimes you gotta. Sometimes it don't work out, but you just take the stop loss. You plan the trade, be willing to get stopped out, lose what you got, and let that trade play out. If you are planning a good trade and doing a good setup, and that's what you should be trying to learn to do, is how to do a good setup that's worth it to let it ride, right? We're not trying to plan out sucky setups. And that's why you don't see me posting a bunch of stuff all the time over on the chart in the trading group. I don't want to post any crappy setups. I want to post one that actually looks like it can do something. And hopefully we get lucky and it does, right? All right, so rule number 5 is don't enter a trade if you are unsure of the trend. Never trade against the trend. And man, a lot of people are really quick to short. Have you noticed that? A lot of people are really quick to, man, some people just act like they get a boner from shorting. I can't wait to short. I don't suffer from that. Maybe I should. I'm technically in a spot margin short right now, Bitcoin, because I borrowed like 0.1 Bitcoin and sold it when we were at the top of the range there. And I'm hoping that I can buy it back and, you know, repay that. So I'm technically shorting, but man, it tries my patience because we're not dropping fast enough. In a bear market, we drop fast. But at the juicy points when you need to open a short, man, I have problems with it. I'll be honest with you. It's like, I started looking, look, all right, let's go over here to Bitcoin right now. Gosh darn it, Bitcoin, are you screwing with me for real? Sucks to see. So I'm shorting this area, and I think my rule is, and it was underneath my trend line. Oh, did you finally come down? Good. But look, it's such a slow come down. So if I sell like 0.1 Bitcoin here, 98,304, and she only comes down just $300, I mean, what am I making there? What am I mean, it's not really worth it unless we can come down here, really. And then I might be able to gain some ground with it. And for me, sitting here watching this go up here, I'm like, oh gosh, you did it again, stupid. You started to, you shorted, you know, whatever. It just take and we got a 382 Fibonacci here, or we might bounce and go for a big strong move. So it takes a lot of conviction to keep these shorts open when you open them in the right places. The places where most people want to start thinking about shorting is like when we come down here or somewhere in the middle, and I'm like, that's not the best places to be shorting, especially support. I see so many people, even the people on YouTube, because this is when the emotion hits you when you want to do it, and they're like, and we get down here on support. It's the same thing that happened right here. Same exact thing that happened over here. Say they may not have a trend line that tells them where bottoms are because they're not looking at things like channels, but I do because I found this out to be true. But during the last drop that we had when we were dropping down, that's when everybody's wanting to short. I'm going to open up a short. You're shorting at support. That's the same as buying the tops. You're selling the bottoms to short the support, and that's emotions in most cases. That's emotions right there, and we all feel it. I feel like shorting there too. I feel like, I mean, we get all the emotions when things start coming down there, but it's just the wrong place. But that's where some of the 1 minute gurus want to call for down. Just saying. We got 4 people hanging out. Let me come back to the chat here and see if we got any. Let's go over number 6. But when the trend, that was the number 5. The trend. We're trading with the trend, and so see, I'm trying to short when we're in a bull market, and I'm not comfortable with that. I'm really not. When in doubt, get out, and don't get in when you're in doubt. So if you're not convinced of your setup, if you're feeling kind of iffy about it, that's not the right trade for you, or that's not the right entry for you, or whatever you're trying to do, that's not the right move for you. If you're doubting it, you're uncertain, you can't tell. I don't really know. Is it up or I'm getting mixed signals. Sometimes that happens, and you're like, here's a bunch of these look bullish, but this is not good over here. You stay out. Easier said than done, though, ain't it? For some of us, it is. Let me pull up the chat and see what you guys are talking about, if you got any. Kelly L says, I used to watch that guy. I tried to trade the 1 minute and kept losing money. So much emotional trading on this chat. That's what it is. That's really what it is. It's emotional trading. And he's got a system. I'm not trying to badmouth his system or anything. I think there's a lot of bias in it, and I think the crazy thing, we were in the same trading group. I didn't know him when I was in there. Me and Joe, of course, me and Joe were in the same trading group. 2, he was there the second time I was there, and he was teaching, and that's how I know Joe. And I respect Joe. Joe's oh man, he's great, especially for explaining this stuff to people. Just trying to understand and get a grasp of it. He's so good at explaining the stuff. But I mean, I don't want to be the one who criticizes somebody else's TAs, but I do see that particular person do a lot of sloppy stuff, and then of course ego gets into it, and that's what we were talking about earlier, man. Nothing will mess you up worse in this game than ego. If you do not stay humble, the market will humble you. But there is one thing: whenever you follow anybody, I mean, the numbers never lie. The numbers don't lie, and I've seen his first Mexia account 2 years ago, $5,000. The goal was to turn it into 15,000, and then to be some success, then give it back, some success. But then it was like, oh, now we added money to it. Now we added $20,000 to it. It got it up to 29 or 27, and I don't know, but it started gradually coming down. There's just it was not this particular count. This one started around 5,000, 5,500, but the Mexi count. And at one time, after the Nashville thing, when he was all pumped up and everything and feeling good and hanging around Crypto Face and all that, he put he put about $79,000 over in that account. He was planning on trading to make the big. But I just don't agree with what's being presented and who it's being presented to, because I just think that can mislead. That is not what new people need to see if they're trying to change their life in this game. And I think it's all about trying to be the man, trying to make the call, rather than trying to teach something that's actually going to help people out. And people are hurting. Hopefully our economy will start getting better right now, but this is one of the very few times that you have to really make some life-changing money in this market, because it's getting harder and harder every cycle, and you don't want to spin your wheels following people that are going to start leading you the wrong way for the sake of ego, and that's where I have issues. So when in doubt, get out, and don't get in when you're in doubt. Here's number 7 is only trade active markets, and in parentheses, only trade liquid markets. That was added by the other person. So, and that's a big thing. So the thing in crypto is to chase these small cap altcoins, right? Meme coins and things like that. Some of them only have like $1 million market cap or even less, or just a few million, and they are more risky, and there's not, any little thing you do there can affect the price, and anything somebody else does there really, really affects the price. There's not enough people trading there. There's not enough volume, enough liquidity. That's the money coming in, the money wanting to buy, and the money, and the ability to sell and just have it constant. You just got random orders that might get hit there. It's just, there's nothing there. So trading the pairs that's got the volume behind it, and that's why Bitcoin is such a great one. And all your bigger market cap coins, because it's there, the liquidity's there, and then the momentum can be there. And even though you think, well, they've already made most of their gains, well, if you're trading and on the trading thing, and you are using leverage, or even if you're spot margin, especially in crypto, you get good gains with your spot margin. It just takes you a little longer, but that's the safest. That is the safest way, and that's spot margin, or I mean, not spot margin, but spot, just standard spot. That's what we're talking about. That's what I meant to say. All honestly, that's how most of your millionaires are made, long-term spot bags. And that's why I wanted to show that with what WD Gann was saying. All this leverage stuff and perpetual stuff, that really just benefits the exchanges. And maybe the YouTubers that are able to, get you in on the adrenaline rush of, I don't know. I mean, I guess it is kind of exciting to see somebody do something. I just think it would be nice if there were more rules followed or taught, or I don't know. Instead of alluding to, this is. I have special eyes. I can see what nobody else can see. It took me 15 years to get here, but I'm going to teach you in 3 months for $100 a month. But you may have to stay in my group for years. You know, you may have. I'm like, you're getting too this is too hard. It's too sophisticated to learn. It was, you know, it took me forever to get to where I'm at. And then, but I can get you there a lot quicker. If you pay me, I can, you know, so which is it? I mean, the TA learning it, I don't think it's that hard. I thought that was going to be the hard part. It's not. Drawing the little lines, even the Fibonacci's after you, and some of the other stuff, you might have a little, you know, some of the stuff's got to sink in. You know, you may have to play around with it a little while before it kind of sinks in, or some ideas. But most of it's up here. It's what's going on inside your head. That's where the real battle is. An execution, and even just an application of your TA sometimes. If we're here to find a good trade setup, not necessarily, you know, predict exactly every move that it's going to do. All right, so distribute your risk equally among different markets. It's better to have 3 small orders on 3 different currency pairs than 1 big order on 1 currency pair. Now that's cool because, well, I'm definitely distributed. I'm over distributed on my spot margin. But yeah, that's cool. I've been doing this a little bit lately. I've been doing some altcoin tradings too, but better to have 3 in small orders. So it's you break it up. It doesn't have to be on one big order there. Now here's where I don't agree, and it says never limit your orders. Trade at the market, and in parentheses means no buy limit or sell limit orders. Now I do not operate that way, and I can't say that I agree. And in fact, I mean, the only benefit of trading market, now remember, this is back before computers when they were trading. They're like, hey, I need you to put an order in here, and it may not hit. So that makes a lot more sense why back in the day they might want to do that. But today, I don't think that's an issue. And I think you can be more strategic with your limit orders. And that's what I do, especially with my spot margin trading. And even with my perpetual future trading. And I don't use market because I think that can affect your entry. So that's one that I don't agree with. Doesn't mean that he's wrong at all. Just means that, you know, it doesn't resonate with me and doesn't work out for my strategies. And you don't have to follow all of anybody's rules. But if you see something that resonates with you, and Gann's got some good ones, just some good common sense things to go over, I think you should add them to your toolbox. Number 10 is don't close trades without a good reason. I was scared. There was a red candle. Is that a good reason? You should be closing trades. You should have a trading plan that will help you figure out when the trend is going to change. That's that idea that he just said that earlier. That's when you need to get out, is when you can identify that the trend is changing. And that's why we use the trend line strategy that I tell you, and draw the line, and when it breaks it, that's your sign. That's your sign. So don't close trades without good reason. Sometimes you see the minute traders do that. And you know, a lot of scalpers, I gotta say, a lot of them look like they are emotional traders. And I thought it was just 1 or 2, but I've seen a couple of others. It's like, and I mean, they talk about trading and all this stuff, but when you see them see them execute a trade, it's just like they just jump in, and then within seconds, like, oh, I'm out. And I'm like, there's no way I want to sit in front of my computer all day and just do that. That if that's what your idea of trading is, I mean, no. You're sitting around getting all this emotion and cortisol going through your body, and putting the stress and going through all that stress and everything to try just to make a little bit of amount to stack. No, it's not worth the time. Not worth it. Swing trades though, now those pay good. They pay good. Extra monies from successful trades should be placed in a separate account. Amen. If you don't want to see it disappear, you need to be peeling off some of that money and putting it in a separate account. I agree. Now, starting out with a small account, like I got over on BitUnix, we opened one up for the show, right? I got 500 in futures and 500 in spot. I'd probably let that one build up a little bit, but after a while, yeah, of course, on that one, I want to take it and do giveaways with it. But that does help if you do separate your wins. You build up your account to a place that you're comfortable trading, get it up to a good place where you can get decent sized positions. Don't get too greedy. It's the greed that kills us. But then when you start, hey man, I've added another $2,000 to this account. Well, let's take that $2,000 off, put it over into our hardware wallet, and just let it sit there, or put it in a Bitcoin or something. But yeah, moving it from that's not a bad one at all. Never trade to scalp a profit. Oh, this is good. You should only shoot for big profits, not small ones, as one bad trade can wipe out lots of small winning trades. And so, yeah, Gann wasn't big on scalping either, because that's not where the money's at. It's not. You can do some stuff and you can sit there and spin your wheels all day, like you see them do. No, bank account's not going up. Or if it goes up, it comes back down, but you never get a reason why it came down, because it's just give and take. It's give and take. You're surfing the waves. You're going up. You're riding the roller coaster. That's all that account's doing, is riding the roller coaster up and down, up and down. It's not growing. It's just riding up and down. So what's the point? Are we just going to ride it up and down? Just keep this account going at $5,000 for 3 years? That's not what we're trying to do here, right? We're trying to multiply it. And I watched some of these guys with their, the trading groups and everything, and they've not ever multiplied that account. No. They've never doubled it. They never doubled it unless they've added money to it to double it. And they're not always forthright about that, or not always reminding. They might mention it one time to say that they mentioned it. But they everybody else that comes in thinks, oh man, this account's up to 20,000. He must have hit it big. Man, this dude knows what he's doing. Dude, I wish I had a $20,000 account. I wish I could trade my way up there. This dude made millions of dollars trading. I need to do exactly what he's doing. Maybe I'm reading it wrong. Never average a loss. Oh my gosh. For example, if you buy whatever, Euro USD, and it falls, don't buy more in order to average out your average purchase price, because you could lose twice as much money now. For my spot margin strategy, I do this as part of my strategy sometimes because I'm buying down. But I've tried this on futures, and I will definitely say that's where I lost my $13,000 back in August 15th. That's my account that I built up from $800. It knocked me down from $13,000, left me with $800, and that's what I built up on my CoINEX. I'm up to about 9,000, almost 10,000. Knock on wood. Since then, but that made me start putting some of these rules in effect with the stop losses and all that. I had to go through that, as I was trying to come up with this. I was trying to apply my spot margin strategies to perpetual futures, and that means letting that little sucker ride down. We can handle it. We got it. We're covered. It ain't going to liquidate us. We can get it. We can get a better entry down here. Average out. Yeah. That's all that. Yeah. It was stupid. And I had to lose that 13,000 before I realized, well, that's a dumb idea to let yourself go into drawdown that much anyway. What kind of rules is that? Trying a strategy is you're going to let it ride down 50% before you... No, that's just a stupid plan to begin with. And it took me losing to figure that out. Kelly, do you keep a trading journal? I'm not against it, but I am not the type to keep a journal. Maybe it's the format, but I tell you what I have been thinking about doing and what I have done. And I wish I do like this idea. Not so much. Now I do think doing a trade journal is helpful. And I wish is that TradingView over here had like a little thing where you can do sticky notes, and then you could write your little journal and just put it as a sticky note. Have a little tab or something you put, and then you pull it up. I know there's a way that you can do. They do have a journal over here somewhere, but it's just not easy to use. But I think that would be a cool ass feature. You just have something and you have like this little post-it note comes up, and you can make your little notes and stuff. Or even on the exchanges or something like that. I mean, TradingView would be a good place, but I'm not against it. I just don't have the dedication to do it. But what I think would be just as interesting is a cycle journal for altcoins and Bitcoin, and write notes is what you see go on in the market. And that means all the little trends, like say for instance, last cycle, you know, this time we got meme coins that just kind of ruined everything, right? Last cycle was NFTs that ruined everything. Remember NFTs? Yeah, they hadn't really made a comeback, have they? No. But everybody's crazy about them. And that took all the glory from altcoins. That's why we didn't have such a big altcoin season last time. Because all that money is being diverted some into DeFi, and then, because that was hot, but into the NFTs, that just sucked all, just like memes. And it was all scams, really. Just like the meme coins now that they're finding out in Solana, finding out what's really going on. They found out what was really going on in NFTs, a lot of wash trading going on and everything. People selling them back to themselves, a way to money launder. It was messed up, but you know, for monkey pictures and everything. So just a journal, the trends and what's going on, and I think that is eye-opening too, because there's always something. It may come in a different form, but there's the same themes that keep recurring every cycle. There's a new thing, new distraction to come and take money away from the main players. It falls off, and then when it's time for the big stuff to boom, it does, and you're not in there. And I think it's a calculated distraction on some level. Put on the tinfoil hat. Oh, there's the book. For anybody that might be coming, this book is available over in the Telegram group under the Chart School. Posted that up today. Where did we go? Let's come over. Avoid taking small profits and large losses. And that also kind of fits into the scalping thing too, because that's all you're doing is taking really small profits, you know. I mean, I would see same trader open up like a, you know, use margin of about $1,800, meaning that his position was a lot of times 30x around there. 25, I think he likes 27, around 30x, sometimes 33. So you're talking about a $50,000 trade on Bitcoin. You're buying almost a whole Bitcoin, and you're buying that. That's what your position is. It goes up a little bit, and you're selling you're selling $1,800 to make maybe $50, maybe 90, maybe 100 sometimes on average. And that's the risk to reward for that is not good. That's horrible. That is totally terrible. So taking small profit, and then if it goes against you, and then you see the losses that aren't talked about, but if you do the math, you can see the losses can get $500 to $700 to $800 sometimes, and then, you know, it's not talked about. So avoid taking small profits and large losses, and scalping, in my personal opinion, can do that. Never cancel a stop loss after you have placed the trade. And that would be, it's getting close to stopping me out. I'm going to take it. I'll move it now. I don't, you know, trade the plan the trade. Never cancel stop loss after you place the trade. Unless you're not canceling it when you move it up. Trailing stop loss, that's different. Avoid getting in and out of the market too often. That's probably one that I could listen to a little bit. Be willing to take money from both sides of the market. I'm trying, but gosh darn it, this little short I'm in, just trying my patience. Your objective is to stay with the trend and make the money. If the trend slows down, sell on rallies to buy back at a lower price. The trend slows down, starts ranging, and then it rallies up. He's saying take some profit there to buy back at a lower because you're ranging.
But my heart
Never buy or sell just because the price is low or high. Oh, this coin's at a good discount. I've said that. I've caught myself saying that. Oh man, this one's at a great place to buy. And from an investor point of view, I can't dispute that it is. But as a trader, you got to go by the charts. You got to go by the charts if you're trading. You know what I find interesting is, you know, there is a difference between trading and investing. Now, they overlap a little bit, but there is a difference. And a lot of people that call themselves traders and say that they made millions trading, I mean, is really more from long-term holds and investing. Now, I see that as being a difference. I see that as being a difference. But, you know, that's maybe more semantics. But that's part of when you hear the YouTubers say, I've traded my way to millions. Multiple millions. Okay. So you got an income stream and you're just continually purchasing Bitcoin. Is that right? Which is a freaking awesome strategy. Here's one I probably need to pay attention to. Be careful about pyramiding at the wrong time. That's where you layer in, and I pyramid in. Pyramiding should only be accomplished once it has crossed resistance levels and broken zones of support. And so what he is saying there, now when I'm doing it, a lot of times I've got a Fibonacci pull. That's not a Fibonacci. A lot of times I got a Fibonacci pulled and I will pyramid to a certain thing. Because my Fibonacci strategy is, you know, I've got several different levels that we might hit, may not hit, but I can catch it as they come down, and that's how I look at it. So my take on that's a little bit different, but what he's saying there is something like that. But, oh man, where'd he go? Oh man, let me put that back on here. So he's basically saying don't catch a falling knife, and that's, you know, you just got a limit order sitting there just trying to catch it, and it keeps going, and then you're catching another one. You just keep buying as it comes down, not knowing. Now, what I try to do is try to find fib levels where it would reverse. So that's my rationalization for what I'm doing, and a lot of times it works. It's not perfect. But he's talking about, let's say you come down to this area like a 786 and you're bouncing, and then you're making a higher low. But he's talking about pyramiding in after you get confirmed of your support, of your trend, rather than just trying to catch that falling knife. It's definitely not a bad strategy. Pyramiding can be very profitable at the right time, and I agree. Select commodities or currency pairs with strong trend up when buying, and with a definite downtrend to sell short. Now, this one's going to be a little confusing for us, I think, because what they will do, this is never hedge a losing position. But now what he's talking about is something that they would do. They would be, say they were longing a stock and it wasn't doing too good. Well, they would choose a different stock, not the same one, and maybe in the same sector or something, and short it to kind of offset that. And so they're talking about, you know, using a different, if you're long one commodity and it starts to go down, don't sell another commodity to shorter hedges. So that gets, and to me, I'm like, well, yeah, those are two different animals. They could totally act different. I wouldn't do that. Now, I might consider this in crypto and some exchanges, we can actually long and short Bitcoin at the same time. I think that's interesting. And it's called slonging. And so I'm not against that, but he says never hedge a losing position. Never change your position without a good reason. When you make a trade, make it with a good reason, according to some definite rule. Then do not get out unless there is a definite indication of change in trend. Like when you break a trend line, or maybe, you know, a certain succession of trend lines, because they can vary. You can have, you know, offshoots, and you could still be good, right? And that kind of goes against what we see with 1 minute scalp traders there, right? We were talking about earlier. Avoid trading after long periods of success. You should maintain a disciplined, planned trading program. So he's recommending that you be, you know, maybe you set a certain time to trade. Maybe you set a certain routine for your trading. But if you've been sitting and you've been killing it for a little while, you need to take a little break. And I think it's for your mental health and for your ego, so that you won't make stupid choices, because that's what happens when you see them. And I can tell you from personal experience and from watching other traders and everything too, when you get on the winning streak, oh, how ballsy you get, how cocky you get. Oh, you're the man. Watch me. Oh, it's going to go here. All of a sudden you're starting to call out exactly where Bitcoin's going to go. Might get ballsy, you know, you just get all confident, or you might see them, and that's when stupidity comes in, and you're putting yourself in danger of losing everything that you just built up. because you're letting your emotions get involved, and you're not seeing it. I'm not being emotional. I'm just good at it, man. I learned. I think I got this figured out, man. I've been knocking this out. Why are you telling me what to do? What have you done lately, huh? Yeah, well, I just won the last 20 trades. Yeah, I think I could probably win this one. You know, pride comes before the fall, baby. If you're not humbling yourself, this market will humble you. And trust me, when it does pull a number on you, and you that time that you build up a big bag and you think you're making life-changing money, and it takes half of it from you or more from you, because I've had that happen before, that'll humble you. And you're like, oh my God. So rules are very important, and I hope some of these rules are kind of, giving you something to think about. Don't try to guess tops or bottoms. Let the market show you that it has generally made a top or bottom. So that's, again, waiting for confirmation. And I know with my analysis in my system, I'm trying to call pivot points, and I am trying to look for some of those tops. That's what a pivot point would be, a point of reversal. But I got a system that's where they usually happen, but that's no guarantee. And I've always got to keep that in mind. But trying to always, you can't sit here and think, I called the top, I called the bottom, and always trying to do that. That's not what it's about. We're not trying to call tops or bottoms. We're trying to find a range that we can trade and targets that we can hit, a trade setup that will work out. That's what we're trying to do. We're just trying to find a good trade setup with a good target that will most likely get hit, even if we have to wait a reasonable amount of time. You don't want trade set up. Oh, it'll hit there eventually. We don't want that. We want when it's going to hit there within, a couple of humps. Within 3 humps, I expect to hit my target. And if it doesn't, well, that sucked. 26. Oh, here's one. Don't follow a blind man's advice, and that's what YouTube is all about. That one, especially if you're new, or even if you've been doing this for a while. When you hear other people talk about the market and stuff, and you get their opinions and stuff, it can have an effect on you. It can have an effect on the way you look at your bags, and you might say, you know what, they're right. I think I'm going to go ahead and, yeah, you're right. That coin does kind of suck. I'm going to sell out I'm just going to sell that one off, or I'm going to sell that part of that one. Just because somebody else was talking about it, and maybe they mentioned a valid point. And maybe it wasn't as important as what it felt like. But you got influenced because somebody else's opinion. And it's not like they were there intentionally trying to get you to sell your bag or anything, but it's just, they were talking about their insights and what they feel. And I do that here too, but just know when you put yourself around somebody, it's going to be talking about things like that, especially if they come out real confident in what they're talking about. Oh, I know what being all, sounding really convincing that they know. I got the special, that's dangerous. That's dangerous. Anything that can influence you. But you should always trust your own TA. Listen to other people and hear them, but when you find yourself reaching for your phone or going to your computer and saying, you know what, I've been thinking about selling that bag anyway. Have you? Maybe you have, but doesn't mean that's the right time to do it. After all, it's probably happening right when that video is on. Somebody's just talking about it. And you're like, yeah, I'm gonna go ahead and do that. And I can speak from personal experience on that, and even I can even think of some situations recently. Actually, if I think about it, sometimes it's the same person, and they're not trying to be mean. They're just being, risk adverse. And sometimes it sounds convincing, but sometimes it can have an effect on you. Watching somebody else's thesis on things, you can be influenced very easily in this space, especially on YouTube and crypto Twitter and other places, maybe in trading groups and Telegram about trade setups and stuff. But one of the things that I don't like, that I think contributes to that, is that you might see somebody on YouTube and they're looking at something, right, and they're like, well, if we break this point, it's going to moon. We're going to fly. And that kind of language, I personally take a little offense to, because that's misleading itself. It's very emotional language. And we don't need that emotion. We don't. To say confidently, yeah, break this and we're going to fly. What the hell does that mean exactly? But it's enough to generate a fear of missing out on people that they might want to jump into something at the wrong time. And there's no guarantee that anything's going to fly or rip or go to it's a chance, but I don't know. Sometimes I just say, we break this level. It's gonna move. It's just gonna fly. I hear fly a lot. It's gonna rip. It's gonna fly. And maybe, you can, I know that maybe there's a setup, like I know when we break out of a bearish pattern, tendency for it to go parabolic, but there's a difference between saying this is a possibility it can happen and saying, man, it just goes up past here. Oh man, we're going to make so much money. Oh, this is going to rip. That's the wrong approach in my personal opinion. That's too emotional. And, that puts the people that are following you, that are trying to learn, in danger of losing their bags, losing their money. Not a good thing. Not a good thing. Let's see what we got for 27. Reduce trading after the first loss, never increase. Oh, that's interesting. So if you're trading, and like if you're trading during the day, and you're like your first loss of the day, well, back off a little bit. Start backing off. You might be, you might be on a bad trend. And we talk about price being on a trend. WD Gann talks about us being on a trend. Like you're winning streaks and losing streaks. Your trend could be off and not matching with the market. That's when you're off your game, and he talks about that. And I've seen that mentioned a lot in his book. I've been reading some of his books again lately, trying to absorb more and more. But I like WD Gann. Avoid getting in wrong and getting out wrong, or getting in right and getting out wrong. This is making a double mistake. So it's all about planning your trade, getting a good trade set up, getting a good entry for it, one that fits along with your strategy, and getting in. You don't want to get in, chase it, get in too high, get in wrong, and then you're selling low, you're getting out wrong. That's the example for that. Or maybe you do get in right, but you don't let your trade play out. You're selling that first red candle. Oh! Or it goes up and it comes back just below, and you're like, oh, and you don't let it, you got a stop loss for a trading plan, but you decide to bail out early, and then it rips up, and you're like, oh man, what a good shit, man. If I stayed in that trade, I'd be about $500, man. Who's in this trade? Who didn't bail out, man? Who's still in this trade, man? Shout out to you guys. Yeah. So making a double mistake. It's all about planning, I believe, for your entries. And then using that discipline just to maintain a disciplined, planned trading program. You should maintain a discipline. Did I skip over that? You should maintain a disciplined, planned trading program. This is 28 of William Gann's golden rule. He's got a lot of wisdom that he shares, and so does Thomas Bukowski and a lot of other people. A lot of the greats out there. It's worth spending some time just picking up some of their materials wherever you can find them. You can find it free online some places. This was even at a website, just doing some research on them. You might find some enlightenment and some encouragement and some words of wisdom that could really help you out. Avi Medina says, I have to start practicing Rule 11. Extra monies from successful trades should be placed in another account. Yeah. That one does help. That one does help. MG Motorsports, how's it going? Super duper late and gotta go to work. Well, you can always watch later, my man. Thanks for stopping by, though. I appreciate it. Kelly L says, do you think there's some basics people should know before trading? And which ones? Do you mean as far as TA, or? I think I need some clarity on that. Your foundational. I will work on your foundation, and that's what's so great about Joe. He really stresses the foundation things. And I, they're you need to know them. They're in the back of my mind, but you'll see, not just Joe, but a lot of other traders. Can I get a chart? Oh, my computer just wants to freeze up. Oh, come on. Are you okay? All right. Well, I guess we're not looking at a chart. I was going to like horizontal support and resistance. I use Fibonacci anymore and eyeball it because I really trust my fibs. I really do. But the horizontal, but I still catch myself every once in a while finding horizontal points on the fly to put out. What is wrong with this? Are we okay? Is it just you? I'll just do that again. Okay. Don't know what that was about. Oh, okay. I'm giving up. TradingView is freaking out here. It's demon possessed. Yay. Let me come back to the chat. The foundation, and that's one reason, because, and I hope you're over here. I hope you're in the group over here. I've tried to put a bunch of materials over here. Oh, do I have it? Oh, sweet. I've also got the book. Oh, that one's a good one. That's the McGraw-Hill, Carolyn Boroden about Fibonacci trading. She can. They can make a 300-page textbook for something they could sum up in about 5 minutes, but that's what it is. Where? How do we? I forget how to manage. Here we go. You click the title, student charts over here, and you go to files. And I've got all kinds of books over here. I got the Encyclopedia of Trading Strategies. I just put, I didn't think I liked that one. The ones I just added today. Chart Patterns, Encyclopedia of Chart Patterns. That's over there. The Trading Bible, Candlesticks, Fibonacci. I mean, there's all kinds of books over here. And then there's some things by, is it over here? Yeah, there should be some earlier books too, like from Wyckoff and from some of the bigger traders. I've got books scattered all over here. You have to go look for them in the file sections, but they're scattered in every topic and everything. I find that like what we just went over, the 23 rules, those basic principles can be so helpful, and they're out there. How to just the little tips and tricks about trend lines and this and that, those foundational things. And Joe goes over a lot of that stuff. And I think I'm trying to answer. I hope I'm answering your question. The foundationals, you need the foundations: support, resistance, trend lines. And I recommend even a good indicator. Moving averages are awesome. I mean, RSI, I think RSI is a great one to have. And I just think some of the, on how you enter a trade and some of the ideas that we went over there, how do you know when to enter? Well, when the basic thing you want to trigger. Carolyn Boroden talks about the trigger a lot. A signal, something that tells you, hey, man, there's something about to happen. A breakout's happening. A trend is getting ready to change. That's why I like the Fibonacci's, because they show me pivot points where price reacts. And a lot of times that is the pivot point, and that's the reversal point. You got to look for signs to make sure that it's happening right there, but that's what the Fibonacci's can tell you. So I would say just learning the basics, and for every indicator you get, there's a trading strategy for those indicators. Every one of them, for the RSI and for the stochastics. There's a for the moving averages, like the 50 crossing the 200, your golden cross. Actually, any cross of one over the other is a bullish signal. MG Motorsport says, that makes sense. Today I've done pretty well, but I've stopped trading for the day instead of losing my gains. There you go. It's easy to give up those gains. Yeah, I guess TA. Okay. And in my series chart, well, Kelly, I really think that book that I just posted today, I think that would be a great help. I really do. Do I still have it pulled up? Yeah, this one. Because this one breaks it down. I mean, just looking at the this tells you, this kind of lays out your syllabus of what you should know. What charts, but your support and resistance, that's always the first one. Then trend lines, and then we got the ideas of an indicator with volume. You might hear some people have different opinions on volume as an indicator, but it's important. And when you got volume on the breakout, I mean, that's what you hope to see. It doesn't mean it's always going to play out the way you want it, but I mean, there's every little indicator, volume being a good one. I think it's always, we gotta pay attention to volume, even though it may not be the key thing to help you nail a trade. I think Joe has some issue with volume because our mentor would say, let volume be your guide. And that was so ambiguous. And he never explained exactly what that meant. And I was like, whole time he said it, I was like, let volume be your guide. And I'm like, okay, what's that mean? He never really gave us a good explanation. And I think that's why Joe has a little bit of an issue with that. Because it's unclear. It's like, what does that mean? It's like, I got issues with cup and handle. Everything's a cup and handle. Or if price is too far away from a moving average, what does that mean? You need something better. There's better ways. So these basics right there. Yeah, the trend lines. And then the patterns. Reversal patterns, continuation patterns. That happens. Candlestick patterns, if you learn some of the basics of candlesticks, the bodies and the wicks, you don't have to learn every individual pattern and all that. You just, or even they've got where you can look at 3 candles together at a bottom or top formation and go that way. I see no need for that. Some people like it, but that's an option. But there's, certain candle shapes, the dojis, the little skinny ones, it looks like it's spinning top, or how big they are. If they got a wick on one side or the other, that means some stuff. The candles themselves can tell you things, and that's good to understand. Just to understand the structure of a candle, what it means. And when you got big wicks, that means that's a lot of buy pressure. That's a good sign for that you got buy pressure to send you up. Little things like that. And then I think this just lays it out really good. He goes over Fibonacci, trading techniques, technical indicators, moving average. Just going through this book would give you a solid foundation. And I've scanned through it. I like what I see here, and I'll probably have to just stream tonight. I'll probably be digging in and starting to read through it too. And it talks about your indicators, the types, the oscillators, and some other things. Some that I don't even use there, but are good to know about. So these things I think are very, very helpful. And I think if you can find a good source of reference material, that was the big thing for me, because I found Thomas Bukowski's thepatternSite.com, and I mention that all the time. You can get complete education right over here, totally free. Thomas Bukowski, man, he wrote the book, The Encyclopedia on Pattern Trading, Encyclopedia of Chart Patterns. He's the GOAT. Retired in his 30s, multi-millionaire from trading. He was. He's a lot drier to read, but you can definitely learn a whole lot of stuff over here. But you just, those basic fundamentals. But I think that book, I really do. I think that book has got a great syllabus. And even if maybe if you're reading the book and you don't like the way it's written or something, just those ideas right here, that's a great order of learning right there. And just get these basic concepts down. Just get those, your basic support and resistance, your trend lines, and you're just adding a tool to your toolbox every time. But this is and chart school so far, we've followed something really similar to this. So if I got moving averages before Fibonacci might be coming next week. I don't know. Oh snap! I'm hitting the wrong buttons here. Is the death cross bearish? And thanks for thanks for posting the book. The death cross is where the 50 is crossing bearishly over the 200 moving average, or that's the technically any negative cross could be considered a death cross, but that's the main one, the 50 cross. And it's a bearish signal. It's technically, and I know this from my bots when I used to. I learned how to program my bots before I ever learned TA. I did it totally backwards. No wonder I was so confused. The effects are not always immediate. So here's the way I explain it. If I can find one anywhere, somewhere. My moving averages, I've got so many and they look like spaghetti. All right, so here is a 50 moving average, just following along, and here the 50 is the blue, and the yellow is the 200, and we're on the 4 hour. And so when it crosses, that is technically your bearish cross. Now, did it continue down? It did. But it doesn't always work out that way. Sometimes it takes it a while. You got lucky on that, and you started getting the move earlier. Now, technically, moving averages they're lagging because they represent so many candles behind. Here's where it crossed bullish, and so far, I mean, this is probably a really good example. They actually kind of did really good here. It doesn't always, but how I've come to rephrase it, because it's generally taken, this is a sell signal. My explanation is it's a sell signal, but it doesn't mean sell right now. Sell the next high. When it crosses bullish, we get the golden cross. It's a buy signal, but it doesn't necessarily mean buy now, buy the next dip. That's how I have come to explain it, because of course this one makes me look like an idiot. This one's like laid out just right, but they don't always. And there's another cross, and you'll hear me talk about this sometimes, when the 100, the Y one crosses over the 200. Sometimes, I mean, that should be bearish, right? A lot of times you will see price will come back up and touch that. And that when that crosses and you're expecting price to drop, that it doesn't, it kind of rallies and then falls. Of course, here's one right here. And I would say I see that about 2 out of 3 times when that happens. And then it's not just these two moving averages. Sometimes I see it on the bigger ones too. The 100 crossed the 200. And that you would think, by the strategy itself, well, that's bearish, so we should be dropping. And at that point in time, we're already down. And what happened, as soon as it crossed, we started going bullish. Come back up and retest that 100, and even the 200, then we drop. So it's still bearish, it just took it a while because it's lagging 100 candles to actually play out. So that's something to consider. How well it plays out also determines kind of the strength of how fast it plays out. I think you can determine by or can be influenced by the time frame that you're on. So bigger time frames, you got to give them a little bit more time. And sometimes you can see what's going to happen. This happens to me a lot. Less and less now, but this still happens, and it irritates me. Because you see the signs on the bigger time frame of what's going to happen. But it takes patience to watch it play out, because you will see at times it look like it's doing the opposite, and it I don't know. Sometimes I find myself struggling with that, because I've caught myself a lot of times seeing the signs where I needed to sell, knowing I need to sell, having my signals I need to sell, but it just wasn't playing out as flat. Like it's still, I think we can bounce back. No, it says it's not good, but maybe we can bounce back and make their own decisions. Don't take as much profits. But if I just follow the TA, what the TA was telling me, instead of trying to argue with it and make up excuses, would have been better. I found that happen. Bigger time frames. Sometimes you'll see something like, I'll see something on the weekly as a warning, but during the week I forget all about it, and then I get caught up. It's things like that, and things like that I still have to work through. This has been so many times I called something on the weekly, on the stream, weeks in advance, but during the next week or two, it's like, my mind shifts. But sure enough, whatever we saw on the bigger time frame came out to play, and as it should. But in the process, my execution sucked because, well, I wasn't staying with that bigger time frame, or let myself get sidetracked, because it just takes so long for sometimes for some of that stuff to actually play out, if that makes sense. Hey, there's Joe. How's it going, Joe? Word PC guy. No, I missed class. Definitely watching Gann's lesson back. We just went over some trading rules that he has. He's got some good ones, I think. Some good wisdom. Kelly L says, I like the cloud. I do too. Cloud gives me peace of mind, and I stripped it down to where I just got the cloud. I don't have any of the other strategy, but it still tells me a lot. It really does. And really, it's just a shadow. It's kind of like just a shadow of candle action. It's 26 candles ahead. A little variations that makes it fill it up, but it's basically, the little sliver of green that I'm looking for is actually a reflection of a big move. But it's just I don't know. I like it because it helps me to remember which side of the fence that I'm on. Are we bullish or bearish? Or are we looking like we're getting ready to have some trouble? And I find that simple little cloud helps me navigate that a lot better than some things. All right, guys, thanks for hanging out. I've got to get ready for the stream tonight. My voice will carry over. Oh, we've been going for about an hour and a half. But hopefully there's been something here, and I do think the next class we'll probably look a little bit more at trading and some concepts, triggers and some ideas on entries. different, keep going over some different ways to figure out what entry style is right for you, because what's right for me may not be right for you. I'm more of a bottom feeder. I got some different, but I can show you signals that I use and show you traditional signals, and things. I want to spend some more time going over things like that, and then I'm going to start bringing in the Fibonacci, I think, and start getting into that, because Fibonacci can be freaking fascinating. And I'm still always learning something new about Fibonacci. It just blows my mind. It's just amazing. What chart is that? This is an ugly chart. This is an old chart. But I think I'm going to go ahead and close this. But thanks for hanging out, and I hope it's been educational. And whether you're watching live, I appreciate you for being here live. And if you're watching it later, hey, thanks. You get the benefit of fast forward in the live. Guys, I'll see you later tonight, all right? Have a good one. Maybe next one I can spend more time on the cloud, because I haven't really given you a solid go over on the chart school. I don't know. I would say one way to think of the cloud is think of it like the 200 moving average. If you're above it, you're bullish. If you're below it, you're bearish. That's the most simple way that I look at it. And that's really the main way I look at it. And then I try to gauge what price looks like and how far away it is from it. I really don't want to touch it, you know. Well, you gotta make your own rules, but sometimes it's good to take a few hints from some of the masters, right? Because they figured all this stuff out. They already went through all the trouble, and they seriously made their money on the markets. So I think, in my opinion, they're some of the best to learn from. Oh, thank you, Roguelike. Guys, I'll see you in about an hour. I'm going to go ahead and sign off. How do we? Let's get the little doggy to wave. There he is.